Hello, Jared. Welcome back.
Jack, it's great to see you. How are you?
I am doing just great. We got all our Zoom things figured out. Excited to go. I see people coming in. Hoag, how you doing?
I'm doing well. I'm very excited about today. Hello, Jared. How are you?
Hey, John, good to see you as always.
Good to see you.
Yeah.
It is. We made it back from Vegas, Hoag and I, and JD, who's also here. He'll be answering any questions that he can in the comments. Otherwise, same drill as last time, everybody. If you want a question for Jared to be answered, put it in the little Q&A section, and we will get to them as soon as possible. So if you haven't done one of these before, just want to give a quick intro to Jared. Jared, how would you describe your position exactly? Performance?
Yeah, I mean, mental game coach, performance coach. I can't say sports psychologist because I don't have a PhD, but yeah, I mean, basically, my job is to remove the emotion that affects decision making, performance, and ultimately, your P&L.
Also, this goes beyond sports. Jared has worked with e-teams, traders, obviously, professional golfers. He's written several books, including The Mental Game of Poker, Part 1 and 2, plus The Mental Game of Trading, which you should pick up. Hoag and I have both read that. There's great stuff in there. You can find that on Amazon. And otherwise, we just kind of want to let you kind of do your thing. We gathered some questions in advance to give to you, and we'll help you out in that document along the way.
Yeah, rock and roll. Listen, I think last time was a lot of fun, so I'm looking forward to round 2 here being equally as much so. And there's a lot of great questions that have come in advance. So I see one question that's kind of come in today's session as well. So yeah, throw your questions in there. We're going to get to as many of them as possible, and maybe a lightning round will be necessary at the end to plow through those that I can tend to get a little bit nuanced and detailed with my answers. What I would say, kind of first and foremost, for those that didn't get to participate in the last session, just a quick kind of primer on my system. Right, I have a system for trading psychology, which is really intended to be fairly analogous to the systems that you are building and have as individual traders and the trading decisions that you make. And the reason I have a system is because otherwise I'm just providing you like advice, and the advice can kind of work or it doesn't work, versus give you an understanding of how to actually work your problems, like to actually kind of fix them over time. So many people think that an issue like greed or FOMO or anger, tilt, can be kind of solved with just the right perspective. And sometimes that works, right? We read books, including my own, and it changes your mind, it changes your perspective, and then the anger kind of goes away, the greed goes away, the FOMO, is now under control. Other times you actually have to build real skill, just like you have to build real skill as a trader. So, in some of the answers to my questions, or to the questions that have come in, you will hear some of that in my answers, right? It's sometimes it's not always as simple. And I think many of you want easy, simple answers, which makes sense. It makes it easier and more simple, and you can make money faster. But sometimes that actually doesn't work. And frankly, if I had things that were that easy and simple, they would cost more. So here we are. Let's kind of get cranking here. There's some great questions that have come in, and I can see the new ones piling in already. So
yeah, we'll get off the camera now, so we're not a distraction. So take it away, Jared. We'll see you later.
Thanks, guys. All right. So first question, it's kind of we'll say a two-parter. It came from two different people, but they're very, very similar. So I'm going to read them both. Nicholas says, I would like to hear some advice to overcome frustration in the losing days, especially when you plan a trade, it gets stopped out, and then just minutes after, the price returns to the original plan without you in the trade. And Roberto asks, how do you deal in situations where predictions are right, the plan is correct, the market goes against us just to kick us out, and then goes on without us? How to get rid of the frustration feeling in order to stay focused on the next trade with the same confidence. So you can see these are pretty much asking the same thing in slightly different ways. Listen, the reality is these situations are tough. The other part of it is that they are part of this game. So, while there is a loss on record, right? It is a losing trade for you, and it, quote, maybe should have been a winning trade. The reality is that these situations are going to happen many, many times in your trading career. And sometimes the answer is you just got to get better at being able to take a punch. a lot of you newer traders, you're not conditioned to the trading environment yet. And you need more conditioning and to understand that trading is very dissimilar to a lot of other aspects of life where, a lot of times like the work you put in is sort of commensurated with some kind of reward. In trading, that's not always the case. And the control that you have is much more in the long term. So, what I would recommend here is a change of perspective, to look at it like a boxer who is just learning to take a punch and understanding that these punches are going to keep coming, but that you gain an edge from being able to deal with them better than how you are, or better than other traders who are struggling with it. 2 is to look at it from the perspective of, the inherent kind of variance that is baked into those, that there are trades that will go on the other side, right? That doesn't stop you out by a tick and then races to your target, or that you're able to get out at the exact high point, right? Both situations, are kind of where the variance in this game exists, and it's going to happen. So sometimes the answer is paying more attention to that good variance that very often as traders is easy to ignore because that's what you sort of think should happen, right? Getting stopped out by a tick is not something you think should happen, and yet it will again and again. So I'm not saying that that's going to provide an immediate correction. So a big part of my system is developing what I call injecting logic statements. Now, injecting logic is just kind of a fancy word for thinking, but the way that it becomes a technique and the way this becomes a skill that you get better at over time is that you write down those phrases. So if there's anything that I said that you think can help in that moment, write it down, study it, read it before you actually start the trading day. You might read it immediately after you get into a position, just as a quick reminder, like, hey, this trade could end up poorly. And if it does, here's how I want to be thinking, right? I want to be that boxer who's getting tougher. I understand the inherent nature of the variation in this game. Do I feel good about my decision? Yes or no? Cool, I do. Well, then that is what I'm going to attach my emotions to, and not the outcome of this one individual trade. Is that a perspective that you can adopt immediately? No, it needs to be trained, because the perspective that you have right now is much more short-term based. And what I'm suggesting here is going to help you to become more long-term based and being able to see the inherent nature of variance over time, see the value of getting tougher over time. So hopefully all that will help. All right. Next question comes from Rochelle. What's the psychology behind holding winning trades and letting go of losing trades? It seems like as a beginner, we do the opposite. It's funny. I was actually just having an exchange on Twitter around this exact topic. So the basic point is like, why as beginners do we cut winners short and hold on to losers? And the reality is, right, it can be varied, right? Sometimes people think that it's just related to ego, just related to, the inability to admit that you're wrong, right? Sometimes a losing trade feels like you did something wrong, and by closing it out, you're admitting that you did something wrong, right? Sometimes these ideas, kind of run in the background of your mind, right? And it's not until you kind of dig it out and ask yourself the why questions, like, why am I holding on to my losers, right? Sometimes it's easy just to be very punitive and negative and harsh and not really ask those why questions. Once you start asking those why questions, that's when you can really kind of uncover really what that thinking is. So, it may not immediately feel obvious to you that that's what's happening in those losing positions where it feels like you're doing something wrong. But, again, that's why you have to kind of think about it, because another reason could be, it's not about doing something wrong. It's just the sheer, I don't like to lose. You can be very, very competitive and not like to lose. And again, closing a position is, the finality of that trade. And of course, then, you're going to close out a winning position on the flip side, prematurely, because were it to reverse and then stop you out, that sometimes actually feels even worse than a trade being, read from the beginning and then just, stops you out, right? Having had money that you could have profited and then, quote, like kind of given it up feels way worse. The reality is that as a trader, you need to become a skilled loser. And yes, let's think about it like that. I'm not saying that we want to lose. I'm saying that to be successful, you have to learn how to lose. And so if you think about it like a skill and you see the inherent, kind of rationality within your system for why it is profitable for you to cut off those trades, then it gives you some leverage in those moments to begin making some progress. On the flip side, if you are continually closing out trades, you're basically guaranteeing your failure, right? Now, you sure have some money that you've acquired, but the inherent nature of your system requires that you're getting a profit, a commensurate return for the risk that you're taking. If you're not doing that, then you're basically kind of cutting out your legs from underneath you, and you will really never either be as successful as you want, or you may not ever actually make it. So sometimes, right, holding winners to your target is really like a bigger question mark about how you're going to actually be as a trader, and giving yourself the opportunity to be successful. Sometimes traders don't want to do that, because were you to kind of find out that you weren't good enough, or the system wasn't good enough, that's kind of harder to deal with than just kind of like half-assing it and kind of slowly bleeding yourself over time. And I'm a big proponent of, like, you know, if the system needs to adapt, or if you are just not, you know, there's just not something about trading, you know, that you don't really love. Maybe you came to it because you saw it as an opportunity to make, you know, quick, easy money, not to become a skilled trader. Then that reality may kind of fly in the face with what you're really willing to work for. So bottom line, right, give yourself, you know, a legitimate shot to make it, and push yourself through the anxiety that wants you to close, or the potential anger that might come, you know, were that position to stop out, which again, you can create an injecting logic statement and talk yourself through it. There's no harm in trying to not be more positive in those moments, but be more realistic and you know, kind of opportunistic about how you want to be thinking. And again, it's about training. All right, next question from Gary. My biggest challenge is going on tilt. I can be consistently profitable for several days to a few weeks. Then I have a day that goes against me, and I end up nearly blowing up the account. Any suggestions for how to address that behavior? If we could maybe just show a quick show of hands, how many people here deal with that? I'm kind of curious, because this is one that I've seen many, many, many times. I don't know if we can get a full, you know, kind of raising of hands, but
I'll come off and raise my hand here. I feel like everyone's been on tilt at some point. I'll just speak for the crowd here.
Yeah, exactly. Yeah, maybe it's not the hand raise, maybe just in the chat. Just give them like a thumbs up, or, you know, a one, just something to say, yeah, this is, yeah, they're kind of starting to flow in here. Yeah, not shocking. Right. So why, like, let's first talk about like why this happens. I think the aftermath, like the tilt that happens after, you know, you start having some losses and things start to go south, is really secondary, right? The primary problem is what's happening, like kind of on that ascent. And for some of you, it's like a very subtle overconfidence or a subtle greed that starts to kind of creep up. And the overconfidence, ask me to repeat the question. Yeah. So basically the question is like, I can be a consistently profitable trader for days or weeks, and then have a day that goes against me, and then I end up nearly blowing my account. So like, we're really trying to understand like what is happening, you know, on that ascent. And like I said, sometimes it can be overconfidence, right? You start to get ahead of yourself. You start to think about all the money that you're going to make. You start to think about how you could close out your best week, maybe even your best trade if you're a swing trader, best week, best month. You can start to feel like you're going to get through this level of the combine. You start to feel like what it's going to be like when you're a funded trader. I mean, you just start to get ahead of yourself. You start to be predictive in a way that feels not like a prediction, but more like what is actually going to happen. And that, I mean, I can't tell you the number of traders for whom overconfidence is actually their biggest problem, but they actually are too blind to see it. And so overconfidence feels good. Why would you want to correct that? Because it's not based in reality. Your mind is now departing from the fundamental truth, which is you don't know what's going to happen. You can't make predictions about the future. And if you do, it actually is telling your mind to relax. Like if you think you know what's to come, even if it's very subtle, right? You think you know, or not know, but like you're thinking about, you know, the money that you're going to be making in the future. It starts to tell your mind to relax. The mind is very efficient, right? It doesn't want to work hard when it doesn't need to. And if you feel like you're just going to kind of make money without really trying that hard, well, then you're not going to try as hard. So they're a little bit of a feedback loop. So what happens is, and I've seen this, your trading actually is declining. You're just not getting punished for it, right? So the quality of your trade entries or just decisions in general really starts to decline at the top. And you kind of become like the cartoon character that ran off the cliff but it hasn't figured it out yet. And then like you look down, you're like, oh shit, and now you kind of plummet. And that's part of why the downward spiral is as severe as it is. Now, another big facet of like what kind of is part of that overconfidence is you sort of forget your own weaknesses. You forget the tilt happens, right? I mean, the traders I work with, they've gone through these cycles again and again and again. And somehow, as they're climbing up, they think that this time they figured it out and they're not going to crash. Okay, now on the flip side, sometimes it's the opposite. Sometimes they actually become very, very nervous, and the nerves become protective, and the protection ends up leading to the snowball, and you end up with the same outcome, just in a different way. So sometimes it's either overconfidence or fear. But the bottom line is, like, if you're going to change this pattern, you got to really work hard at like correcting what's happening on the ascent, right? So we're really after very consistent execution, regardless of what's going on with your P&L, regardless of what's going on with the market, right? And that is hard. I understand that. There's a tool that I use called the A to C game analysis. I'm actually going to share my screen real quick to show you this. Let me pull this up. I hadn't planned on doing this, but heck, I think I can do whatever I want. So here we go. All right. All right. Now you should all be able to see that. Jack, if you just pop on just to confirm that you can, that would be great.
Yep, we can see it there. And I was holding my breath. It works. There we go.
Well, you can breathe as we look in. So this is called an A to C game analysis. It is not that complicated, okay? But it actually, I think, is one of the most effective tools that you can use as a trader. Basic premise is what we want to do is be chopping up our game into A game, B game, and C game, and then dividing it from a mental standpoint and a tactical standpoint. And now that you can see, this is just an example. So your trading strategy may be very different, but the kind of stuff that's showing up here, may be quite relatable. Bottom line is, right, I want you to take some time to craft this out, right? Like, it's not a very complicated format, right? Just open up an Excel file. You can do it in Word doc. You can do it handwritten. Doesn't matter. Think about what it's like when you're at your best. Think about it like what it's like when you're at your worst, and everything in between. Now, what is this going to do for you? It's going to allow you to grade your performance. You could even do this trade by trade. I mean, I have a lot of clients that do that. They are less focused on P&L. What they do is after they've entered a trade, they immediately take a screenshot. Sometimes they'll either print it out or they'll look at it on a different monitor away from the price action they're in. They will look at the trade and they'll evaluate their mental state and then ultimately their decision in getting in this trade, and they will grade it. And that is how they measure the outcome of the trade at the moment that they get in. Now, of course, if they exit prematurely, then they're going to kind of downgrade the relative grading of it. But the point is, right, that you're trying to separate that connection to being overly P&L focused and move it more towards performance-based, right? How good are your decisions? And so this A to C game analysis, I think, is a really powerful tool to do that. And so what happens, right, to those traders who are going through those big cycles is you sort of think that you've just now kind of chopped the back of your range off, right? As if you could just kind of slice it out. And so what you want to do instead is, as you're now kind of falling down, you're really focused on B game. Okay, that is your the point with which you can start to make some progress, right? There's another question that came in here, and I'll actually just read it now because it fits with it. Right? How do I recover from the I don't give a fuck state of mind? Okay. Listen, it's so easy to just say F it. And, let's say there's 30% left in your account. You feel like this combine is dead. Like, why not just like restart and get a fresh start? Well, the reason is because you are not going to be fresh. You are going to bring in this existing range into that next combine. And so nothing really has changed other than, you get to restart and do the whole thing over again. You haven't actually learned how to improve your C game. So on the downward spiral, that is your opportunity to do something different. And if you do it, even at the time where it's the hardest, right? Even if it's only just a little bit, it can be transformational over time, right? And getting some repetition there. Is this hard? Of course it is, but that's why it's so valuable. But aside from this particular scenario, I strongly recommend that all of you have an A to C game analysis. For me, it's one of the centerpieces of my system, and it just allows you to like separate from, like an overly P&L focused mentality. And I know that is a difficult thing for many of you, right? Because, you're looking for feedback, and as people, we need feedback. As professionals, as performers, we need feedback, right? For me, golf is like my, my trading, right? That's the thing that I take the most seriously from a competitive standpoint, right? I take my coaching very seriously as well, but imagine if I were on the driving range or on the golf course and I could never see where the golf ball went, right? My swing would significantly degrade. Actually, it happened a couple weeks ago. I was down in Florida playing, and for a couple holes in a row, I couldn't see where my tee shots were going. I couldn't see the ball flight. And as a result, like I couldn't make the adjustment. It wasn't until I actually saw what was happening, I was like, okay. And I could fix it. And so we need feedback. Now, if you're relying on P&L, if you're relying on, monetary results as your source of feedback, well, then how is that any different than talking to some random person on the street saying, hey, what do you think of this position I just got in? Like, who are you? A, do you even know anything about trading? It's just like, it would be completely random. Right? And that ultimately is what happens, with your perspective, if it's being overly influenced by short-term results versus something that is far more objective, something that you've spent time crafting. Right? I would give yourself a couple of weeks to nail this thing down, get it to the point where it does not change at all. And then you have something that you can reliably use day after day to make yourself more and more consistent. Every question that's in here, I know you could benefit in some way, shape, or form from this A to C game analysis, which is why I've spent more time talking about it than I probably should, given how many questions there are and how many more I want to get to. So I'm going to keep moving on here. All right, let me get to a couple of questions that have come in from you all on the fly. My question would be on how to pull the trigger and don't hesitate when entering a trade. So again, I think the key thing we want to be finding out here is like, what is happening in that moment, right? So for some of you, and maybe this is the case, you actually have some deeper questions about your system and strategy. It's not as tight as you think it may be. And so the hesitation is actually legitimate. There's too many doubts in your mind to pull the trigger with enough confidence and conviction. And that's not about this one particular position. It's a more general question about your system. And if you're still new, that's fine. But you have to be willing to accept the inherent uncertainty that is being new at this game and say, you know what? I don't have full confidence and conviction. That's okay. I'm trying, and let's go and see what happens, right? And but if it's not that, if it's more of like a deeper fear of losing, fear of making mistakes, fear of failing, then you have to kind of start to unpack where that fear is really coming from and why, and kind of break it down. Okay. No matter how many times I learn, I know my issues. I overtrade and lose all I've gained. I keep doing it. I've been trying to pass step 1 of the combine since September. I go from confident to total loser, back and forth. So maybe actually this came from Michelle. Maybe Michelle, the cycles that I was talking about before would really be quite impactful for you here. So I won't repeat myself there, but I will get to the first part of your question. No matter how many times I learn, I know my issues, but you don't know what's causing them. So that statement, right, it really reflects the gap between understanding what is happening versus understanding why it is happening. And it's so easy to get critical, that you keep repeating the same thing over and over again, right? What's that quote from Einstein, right? The definition of insanity is doing the same thing over and over again, expecting different results. And so you feel crazy, right? Because again, you understand what is happening, but you don't understand why. And that is a critical change. So let's just open. I guess we're going deeper in my system today. Let me show you another tool of my system, which I will say is complicated. Okay, this is hard to do. If you haven't picked up the mental game of trading, if you're going to undertake using this tool, I would strongly suggest that you pick that up because your ability to utilize this is going to be significantly compromised or just a lot harder. Like my expertise and skill as a coach with my clients is greatest at completing this. Okay, don't worry about the name of of this thing, mental hindrance. It comes from poker. I just was kind of keeping it for simplicity. But basically, this is my tool that I use to get at the root of particular problems. So no matter how many times I learn, I know my issues, right? Describe the problem in detail. Cool, you've got that nailed. But can you explain why it makes logical sense that you have this problem, why you think this way, why you feel this way, or why you react that way? And my answer, or my assumption is that the answer is no. You're very, very skilled here, but you need to be really skilled here. There's nothing irrational about any of the problems that are listed in any of these questions that have come through, okay? Nothing irrational. It is very logical once you understand why. And it just takes a little bit of a change of perspective, a little bit of effort, and a little bit of work to understand why you are reacting this way, why you are overtrading, right? And the answer is not because you're stupid. The answer is not because of your emotions, right? Your emotions are a symptom of what's going on. And if you get to step 3, like, why is that logic flawed? This is like the heart of the matter. This is the root of what is causing that overtrading. It's not a discipline issue, right? There's emotion at play here, but that emotion is being driven by deeper flaws, illusions, wishes, biases, hopes. Okay, those are the things at the heart of these problems. Okay, and so this mental hand history is your tool, my tool, to dig into this. And so the entire book is designed, okay, to help you to get at the root of your problems and solve this. Because once you do, right, step 4, come up with a correction of that flawed logic. That's the injecting logic statement that I was talking about earlier, right? That really helps to weaponize your perspective on how to solve these things in a more profound way. All right, moving on here. Sevi, I've started trading real money and I've noticed a difference in my emotional state when compared to paper trading. How should I go about dampening my emotions in this new environment? Kind of like that learning to take punches, right? You've got to inoculate yourself, you just condition yourself and being in there more often. But you can try to make paper trading more real, right, by understanding kind of the issues that are likely to come, when you start trading real money. So I would suggest trading on a real account or with real money to understand kind of what happens. And then once you understand what happens to your emotions, to your mind, bring that into paper trading and start to correct that in the same kinds of setups you might see there, right? But very often we try to treat paper trading like this is like a bubble. It has to become trading. Paper trading is not trading, right? Because your emotional state, right? Your biases and wishes, right? All that is not being borne out in the live market as it is in the live market as we want it to be. So that's what you have to do is make the paper trading a lot more profound. Eric asks, how can we train discipline permanently? You can't. Okay. You can train aspects of your discipline, but to be like perfectly disciplined, that is not a thing to aspire towards. It will suck the life out of trading. It'll remove your ability to access intuition, right, as you kind of climb the ranks. So I would look at discipline as being kind of categorized in that kind of A, B, and C category, like I was doing with the A to C game analysis, right? And so really what you're trying to do is improve the areas of discipline where you're at, where it's weak. And if you do that, generally, by and large, most of you will, be in pretty good shape. But I would argue that for a lot of you, you think your violations of discipline, right? So you break your rules and you enter a trade prematurely, you get out of one too soon as well, or you're over trading, you're breaking your stop losses, whatever, right? Lots of ways you can violate your discipline. I would argue that most of the time that's not actually a discipline problem, it's an emotional problem. You don't realize that it's FOMO, greed, anger, fear, right? Loss of confidence, overconfidence that is actually forcing your hand to violate the discipline. And you don't want to just shove those emotions away. You want to actually understand them and correct them in ways that I just mentioned. Okay, let's get to next questions here. This came in from today. When trading off your plan and not trading your strategy, I feel like I'm trading my intuition, but really I'm trading my emotion. How do I get away with this? I'm so happy that you were able to see that. Yeah, it's a very difficult thing for a lot of people to recognize, because intuition. So I'm going to describe this very, very clearly. Okay, intuition is your highest level of decision making that is different than your instinct. Okay, intuition, highest level of decision making, very often comes in a very kind of distinct and profound way that is qualitatively different than when you're making an emotional trade. in both instances, and this is what makes it hard, you don't always have kind of full logic and rationale for why what you're doing feels right or seems right. And that is why the two can kind of become conflicted and difficult. So what I would suggest you do is actually create like a piece of paper, draw a line in half, intuition, emotion masquerading as intuition. Okay, and then write out what are the differences in how you think, how you feel, your decision-making process, physical cues, just some of the actions, right? Very often there are very distinct differences. Okay, and so real intuition oftentimes comes as like sometimes clients will say it feels like puzzle pieces just kind of fit together. It's like a mental equivalent of that, whereas like emotion, there's actually like tension and stress and pressure. And it's a very different experience, right? Intuition's like, kind of fun, light, exciting. So qualitatively, very, very different. I will say on my website, jaredtendler.com, I have a free intuition ebook. So if you want to go deeper on this topic, check that out. All right. Next question. When we go against our rules of trading, should we make a harsh punishment and completely stop trading for the day? Is that too harsh, or would that correct our behavior faster? That is not too harsh, provided you understand why you are going against your rules of trading, right? Which goes back to things I've already mentioned today. If you don't understand why you made that rule, then you're just kind of like an a-hole kind of parent who's like, punishment is just like wildly disconnected from what the kid's doing. It's like, no, you want to teach yourself. You want to learn how to do something different. And harsh punishment without understanding why you were violating your rules, is not going to help you to learn, right? I mean, that's the whole point, just to help you to learn, right? Sometimes punishment works when you do have enough knowledge, but maybe you've gotten a little bit lazy and you need that punishment to kind of just boost your energy so you're more intense and not a little bit kind of lackadaisical, like that can work. But yeah, punishment for the sake of punishment is not for high quality trading. All right, next question here comes from Edward. My winning trades are bigger than my losing trades. Okay, but my losing days are bigger than my winning days. Many of my winning trades break even from trying to let one contract run when I could have taken profits. This is resulting in my winners being few while my losing trades stack up behind me, thus my stats. Do I need to stop trying to let my winning trades run? I feel like there's like something missing on a strategic standpoint. So I don't know, Hoag, if you want to jump in here by all means, or we can just, Edward, I think that's the place you need to be digging. I'm not convinced that this is a psychological thing here. I will keep going though. In the meantime. All right, Amp got scared and kept feeling the urge to take partial close positions and feeling regret to close too early later on. Okay, yeah, I mean, like, got scared. I mean, you've got to better understand kind of what the nature of that fear is, right? I mean, the regret is secondary, right? And the regret makes sense because you're not trading your system. So like to feel good about that would be weird. So yeah, I mean, like it's really, really common. I mean, I think I said this in the last one, I'll say it again here. Trading is very, very intense. You are in the most competitive marketplace in the world. Okay. So marketplace, but maybe more like performance endeavor. So if you're going to do something that is atypical, which is be successful long-term, right? You have to be willing to risk to create that return. And that is a hard thing for some of you to wrap your head around, right? To really understand what you've signed up for. And some of it is just inoculating and conditioning yourself to this environment. But another part of it is willing to say, I am willing to fail, but die trying doing it the right way, right? Versus kind of finding a way around to like feel better in the short term, feel more at ease in the short term, right? Feel better now, feel better in the future. In general, most people that I work with feel much better failing and knowing that they failed, and that allows them to move on than kind of half-assing it and just like kind of always having those questions in the back of their mind of like, oh, what if I had done X, Y, and Z? Maybe I could have, and it just tortures them. So yeah, get to the root of the fear, man. and see what you can do. Andy, how can I be effective when stuck in a losing position, in a losing streak? So this comes back to the A to C game analysis, right? Like what's going to happen in your C game, right? So how can you be effective when stuck in a losing streak? Hammer away at your B game. Make really solid trades. Don't try to do anything too special. Don't try to change your strategy too dramatically. Of course, you can make some small refinements, but for the most part, people make a lot of bad decisions when then they're in a losing streak, and typically that compounds things and only makes it worse. So for the most part, yeah, if you can stay really solid, and B game should be really solid. If your B game is still really bad, then you're a beginning trader, and a losing streak is immaterial because you're not good enough yet to really understand what the heck you're doing. Like if you're relying on only A+ trading to have any chance of being profitable, then you're still kind of incubating. Just allow yourself to be a toddler, just like kind of bumbling around. Like that's just where you're at, and that's fine. Everybody's there at some point in their career. Okay, I was that way as a coach. I mean, I think back to how bad I was early in my career and how good I thought I was. I mean, it's laughable, but we were all there, and every successful trader, could say the same thing too. All right, I already answered that question. What's the best way to overcome a gambler's mindset? Well, that is not a simple question to answer. Question to answer, and the fact that you're asking it so simply makes me think that a part of your flaw here is thinking that there's easy answers to complex problems, and that actually is gambling with your mental game. So you're not going to gamble your way to a better solution to gambling. I mean, in mental game of trading, there's a section within the confidence chapter that's called desperation. Desperation is the closest thing to a gambling problem that I work with. I do not work with people that have a true gambling problem who are wagering and betting money that is going to significantly impair their life. I'm not willing to take that risk on as a coach. But desperation is the closest thing that gets us to it. And there's 10 steps, maybe 11 steps that I've outlined there. If you don't do any one of those 11 steps, it's almost like you don't have a chance. So, for lack of a better answer right now, the simple answer is get the book, study that chapter, and begin working on it. Or get professional help, because if it's truly not a gambling mindset, but actually a gambling problem, then you can't, it's just going to be more complicated than you think to solve, because it's such a profound and severe issue. All right. Other questions? All right. So Daniel is asking, why can't I be consistent with my live account? But when I do the combine, why can't I be consistent with my own live account, small, but when I do the combine, I can't find consistency? My guess is you're probably becoming a lot more outcome oriented than you are with your live account. Maybe you actually are able to be more process, performance based, in your focus, kind of a lot what I've talked about already. But then, the combine makes it feel like there's, like kind of a true finish line that you're trying to get to, and that is the case. And so it's just kind of taking your focus away. So, whenever that happens, right, it's not like you have to learn anything new. You just have to learn something new in a different environment. And so you can have to double down on your process. So what I would do is like, think about what you're doing in your live account, your own live account, that you do well, that is kind of disappearing in the combine, and then make that your primary focus as you try to complete it, really redoubling your efforts, right? It is like kind of a training effect. You're in the gym, first couple reps are easy. Why are they easy? Because you already have the existing strength. You're not building anything in that moment, right? During those reps, it's the end of, that set, or the end of, let's say, the third of a 3-set thing, right? So, last couple of reps, they are the hardest. That's where you have the opportunity to really build strength. So for you, right, combine is your chance to build extra strength around things that you already do naturally in your live account. And I promise you, if you get even better at it, it will mean that you're going to be able to kind of climb the ranks and size up a lot easier too, right? It's like you're just kind of building a stronger foundation. Ezzy, I've been having good day. I've been good at day trades. I used to be good with swing trades. Now that I am good at day trades, quick and it's cash at the end of the day, I'm getting impatient on my swing trades and getting out early, even on working trades. Any suggestion to help with that? Yeah, I mean, this goes back to that feedback, and it's clear that your goals, right, are maybe more urgent than you realize, and maybe it's because circumstances in your life, right? If you're trying to become a trader and you have, a job that you don't like, or, just circumstances are like, oh, I want to make this work now. That urgency seems to be kind of pouring through here, right? Versus I want to make this work right, versus I want to make this work now. So again, kind of going back to that injecting logic phase, right? In your swing trades, right? Inject that logic, right? I want to make this work. I want to become a skilled trader who can, manage multiple types of timeframes. I mean, that's a skill in its own right. Not every trader can do that. So if you want to be able to have that skill, think of it as a third skill, right? Day trading, swing trading, managing both at the same time, right? Becomes a third entity that you are becoming skilled at. And that is something you want to get right. You don't want to get right now. Okay. Do you have some tips on how to stay focused? I'm trading in the 15-minute chart and always waiting for the candle closes. My system works, but sometimes I find myself getting distracted during these 10 minutes of waiting and then miss good trades. Yeah, so you could use a timer and kind of just use that to kind of bring you back. The other is you probably have to kind of define what your optimal focus looks like in this space, because I think to allow yourself to have some ups and downs with it, where there are periods where you are more intense and some periods where you can be a little bit calmer. Like what is acceptable kind of in that downstretch, right? You don't want it to be, I can go on a Twitter, Reddit, trading channel, allow your focus to get too distracted. But I think if you don't have a good definition of what your optimal focus looks like, in realistic terms, then it becomes harder to kind of get you to actually train and develop that. It's just sort of an idea, it's like, oh, well, don't be distracted, be focused. Well, but what does that actually mean, right, in practical terms? Next question, profitable trader here with a fear of success. Fear money will change relationships with friends and family. Made the mistake of being vocal on success and early numbers, hitting ceiling around 100 and 200K, not breaking out, almost like missing A+ trades on purpose. Any help here? So that fear has already kind of proven itself to be true. So it's actually not a fear. It is now a thing that you have to manage. And so I would maybe write out some tactics in terms of how you're going to handle the social implications of being more successful. How you want to handle it yourself. Now, that would be the social implications, but part of me wonders whether or not it would actually start to change, you and many people that I've worked with who have the fear of success are really fearful that it's going to make them kind of arrogant and cocky and, change their lifestyle in ways that's, going to really compromise just themselves. And so, if that fear is warranted and real, there's indications, then you can actually begin to correct the overconfidence, the greed that may kind of pick up as part of that now. If it's not really that warranted, well, then maybe it's just that you've been influenced by what you've seen with other people, right? Because many people do get kind of swept up in success, and it does actually reveal aspects of their character that they didn't know were part of them, right? It does lead to some changes. So I think you kind of have to look at, either the social implications or the individual ones. Okay.
Thank you for that answer, Jared. That was great. That's a question that I hear a lot is, I firmly believe a lot more traders could be more successful if they could get over that fear of the success and the things that can change them when they become successful.
I agree. Actually, and as you said that, it made me think of it. One other piece of this. Sometimes the success is also feared because it could change your trading style and strategy too, right? And so this kind of leads to the thing I was mentioning, in that first question of like, well, what's happening or the third question in the ascent kind of up before the big blowout. So here it's not the big blowout that's the problem, but here it is that you're like fearing allowing yourself to go on a high because maybe you actually might make some poor decisions. And if you have blown accounts in the past, you might be fearing that the same thing could happen if you really allow yourself to have that kind of top end performance.
Big time, right? I mean, what happens if I become successful and I lose it? I can't take that. Why would I become successful to begin with?
Yeah. So there's a section in the mental game of trading that I talk about this mostly under the context of perfectionism, but like the analogy I think holds in this example, which is that, here you are kind of like climbing up the mountain, right, of trading in a sense. And when you're in a spot like this, you'll reach a point where you're high enough that the clouds come in, or maybe you're in San Francisco and it's like this like fog. And so what it does, it make you feel like you're no longer standing on bedrock. You're just standing on the cloud, just like waiting for the, success and skill to just like disappear in an instant. And so the way around this actually is just perception, right? You haven't kind of owned the foundation of skill that you have, the accomplishments that you've acquired. And so as a result of it, you almost like lose sight of yourself, lose sight of your trading ability and your trading skill, not because it's actually there, but because you're like a magician. It's like, oh, it's poof, it's gone. It doesn't feel tangible. So this is something called expert induced amnesia, and a lot of this is like why a lot of great traders, a lot of great athletes, poker players, traders, golfers are actually bad coaches because they don't know what they're actually really good at. I'll give you just a quick anecdote. I know we're kind of getting shorter on time, but I took a golf lesson in trying to get out of the bunker, right, out of the sand trap. And I was apparently taking too much sand. This is what my instructor said. I said, well, cool. All right. Well, how do I take less sand? And so he just said, well, I just think take less sand, and I take less sand. I'm like, well, great. Thanks for that advice. I mean, clearly, but like didn't give me any technique. So his amnesia was so profound, he couldn't explain how he takes less sand. So a lot of traders, right, lose sight of the fundamental nature of what makes them skilled. And you actually have to take time and consolidate that, write out your skills, your accomplishments, right? What aspects of trading have you mastered and no longer really need to think about, right? But what aspects are you still working on, right? So if you kind of know what your own proverbial stop loss is, right, or your own kind of points of support, for your trading, right, then it's going to allow you to kind of climb higher versus feeling like you're climbing up the mountain like without any rope.
We used to call that the God complex. When you things are going so well, you think you're God's gift to trading, but it's going to end.
And I would call that, extreme overconfidence. And that extreme overconfidence is delusional because it's no longer based in reality, right? You're now making predictions about your future, which nobody can make, let alone. So, what's going to lead to profitable trading, from that point forward, right? It's continuing to leverage the system you've developed, not thinking that you can kind of just rest on that and apply it easily.
It's always about the homework, isn't it?
Yeah. Funny, I just was working with a client earlier today, and very skilled, experienced trader, and even he, right? There's just a part of us that wants things to be easy. It's just so easy to fall in that trap of wanting things easy, and the reality is, if it's easy, you're doing it wrong.
Huh. Thank you very much, Jared.
Happy to help you out. All right. Let's see. All right. I've tried to stick to a strategy. It worked a couple of times, but most of the time it would be losing. Doesn't make sense to push myself. Sorry, you got to send that one again. Yesho. Jenner, I quit trading one day during a bad day. I was short biased and the market was going up. I wasn't down too much on the day. I checked my account on the Topstep website and saw that I was beyond the maximum overall loss in the combine. I figured, well, I might as well go for broke. I hit my daily stop loss limit while continuing with my short bias. That's where the market started to drop like crazy for the rest of the day. Talk to us about instances like this. I mean, I might as well go for broke. I mean, this is what I said earlier. Like, you might be successful in that moment, but you're kind of gambling to get it. And I think then what you get is like a false reinforcement over time. And that actually erodes confidence, right? You think that, you're kind of getting back to a spot that would be, better, but you're actually in a weaker position than you were. I mean, even if hypothetically you were out of the combine and already a successful trader, right? If you were to do that at any point in your career, you are worse for it because of the false feedback that you've now gotten. And subconsciously, you know it, right? Because really what you've done is you've thrown out your strategy for a little bit of gambling, and it being rewarded is not a recipe for long-term success. All right. We got time. I think we're a little lightning round here. If there are any other questions, fire them in, but I'm going to get to all of them today. How to recognize that you are in decision fatigue and what steps to take to avoid it before it leads to tilting. So decision fatigue, just for those that aren't familiar with that term, basically just refers to the idea that, your brain has like a limited capacity, right, for just like endurance and energy. And so it would make sense that over time, right, your decisions are going to get worse because you're just tired. And this actually happens, I think, for a lot of traders who are in, I mean, you could be in a day trader, but if you only take a couple of trades a day, you're not kind of a high frequency style, right? You might be in a trade for a couple hours or longer and just seeing price dance around. Obviously, swing traders like go through this all the time, but like seeing the price dance around really just kind of frays your nerves, and eventually you'll just kind of snap and make a decision to, close something out prematurely. And so how do you deal with that decision fatigue, right? Well, I mean, first and foremost, you want to kind of map, right, the escalation of it, right? Where are the inflection points where it's particularly problematic? And then you're going to take action a couple steps before that actually were to occur, right? So you have to take some steps to recognize the signs when that point occurs and then find the signs that occur before that happens. Otherwise, you don't have an option to do something different. Now, if you see that it's predictably like at a certain point within a trade or predictably at certain points in the day, well, then you can kind of get ahead of it from a time standpoint. And that can be a little bit of a cheat code here to do that. But either way, right, the recognition has to come from a little bit of self-study. Miguel, when you have an open trade and you have that gut feeling that something is wrong with it, what can we do in order to avoid that being that toxic thinking? What if I close the trade and it starts running in the way that I initially projected? I think this goes back to the intuition versus emotion masquerading as intuition example that I gave earlier, because you need to know that that gut feeling is actually based on intuition, not based on emotion. And if you don't have the ability to differentiate between those two things, then we can't make sure that you're making the right decision in that moment. And if you are certain that it is a gut feeling and it is intuition, then you have to make a decision before you even get into these trades, before the trading day even starts. It's like, are you making that kind of discretion part of your strategy? And if you are, then you're going to live with the outcome, and the toxic thinking, is irrelevant. Bradley, how do I train my brain to stop trading when things start going off the tracks? I do well for a little while, then I crash and burn. I've been in the combine for 14 months, past 11 months stuck in step 2. I think you're just thinking about this thing the wrong way. How do I train my brain to stop thinking about when things start going off tracks? Why are they going off track? I think there's a lot of exploration you need to do from a mental and emotional standpoint. I mean, like, I don't want to try to be showing the book here, but the book really does go into a lot of detail, around these types of issues, and like what happens, right? So you got to know, right? Is it fear that's causing you to go off tracks? Is it a loss of confidence? Is it greed? Is it FOMO? Like, what is happening, right? And then that's going to give you an opportunity to be able to start to stop. Now, the actual, like, how do you stop trading? At this point, what you've proven is that when you are emotional, you're just going to keep firing. So similar to the advice that I just gave around, the gut feeling, right? You've got to recognize those signals and get to the point where you can recognize the signals while you still have full mental capacity, or at least close therein, right? When your emotions rise too high, they do shut down your ability to control your emotions, right? Do shut down your ability to have enough cortical bandwidth, right? Enough brain power to do something different versus do something with automatic and do something that's easy, which right now is to continue trading. So recognizing those early signs like is critical to give yourself an opportunity to do something different. But I think to recognize those signs, you gotta know what category of problems you're really dealing with. Fear is my biggest adversary. I went from being scared to enter trades to now being scared to lose profits. I micromanage trades and then won't trade anymore if I have a good trade, limiting my winning trades. My winning trades are bigger than my losing trades. Some days I will only take one trade and cut myself off. Then on a losing, I mean, the flavor of this one has, it's fingerprints all over things we've already talked about today. So hopefully there's enough for you to work on there. All right, I think this is going to be the last question. Mario, how can I improve my A game? Like the inchworm technique you talk about in the book, when it's working, I'm comfortable and fear messing with something that is not broken. So great question. For those that are not familiar with the inchworm technique, basically it takes off the A to C game analysis that I talked about and really talks about how progress happens like the way an inchworm walks, right? Inchworms move like this. They're kind of like walking caterpillars. And so imagine like your A game moving forward and your C game moving forward and your A game moving forward and your C game, right? For a lot of traders, what happens is your A game progresses, but your C game doesn't move. And that gap between your A game and your C game, if it gets too wide, your performance is going to be really inconsistent. And so your job is not to improve your A game, but to improve that C game. Mario's asking something different, right? How do I improve my A game when I've already improved my C game, right? So what we want really is that A game improvement to happen organically. And a lot of times it comes through B game, where you recognize that these are the things you could be working on. And if you do them better and more consistently, what's that going to do from a probability standpoint? It's going to mean you're in your current A game more and more often. And the more that you're able to do that, the more often you're going to naturally have new insights, whether to improve your mentality, your process, your routines, or maybe even some strategic adjustments you can make too. That organic growth is going to be much more sustainable and less likely to have some kind of setback that is, what oftentimes happens when you kind of like look for another strategy, another system, another little tip or trick or something that's, indicator, centric, like looking for something to move your technical proficiency better, right? I'd rather see you get really, really consistent from a mental and emotional standpoint in your A game, and then naturally see what comes out of that than, to kind of gamble with something outside of yourself, which, is kind of to your fear here. So we got through all the questions, which.
All right. Yeah, well done. If there's anything else in one of the question modules or whatever we didn't quite get to, we'll get back to it some other time, or come to group coaching with Hoag and we'll go through those if they're more strategy based as well. But thanks a lot, Jared, for being here. This was a ton of fun. I always enjoy kind of being behind the Zoom screen here on these and listening along. It was good stuff.
I learned a ton. Thank you very much.
Thanks, Jack. Thanks, John. Appreciate it. It's always great questions. And I love working with traders at this stage of their career, because, you start building some habits in the right way, and you start getting your perspective kind of formed in the right way. Now it just makes things, a lot easier going forward. We're not going to say it makes it easy, because if it was easy, it would not be as valuable when you get on the other side. So
it's never easy. One of the things that really stuck out to me that just kind of hit me near the end of this was the intuition versus emotion. I call it intuition versus impulse. Impulse, fear and emotionally based reactions. Intuition, knowledge and experience based, right? So how do you separate them? How do you know the difference? I find that intuitions, real experience based thoughts or ideas, they whisper to me. Impulses yell at me.
See, that's exactly what I was talking about earlier. Like, what is the differential? And I'm glad you brought that up, John, because I realized I forgot like the most important part about the conversation about intuition, which is if you've been trading for less than 6 months, you don't have any intuition. No. You got zero intuition. So if it's intuition, you're lying to yourself.
Stick at it for a while.
Exactly. To your point, right? You need enough knowledge and experience in order to even have a chance at having some intuition, because it's, the intuition is not like like a gypsy or a fairy or like some
Spidey
mystical
sense.
being, spidey sense, just like popping into your mind. It's like it's based off of real knowledge and experience.
Mhm.
Yeah,
Awesome.
we'll dive into that more next month. In the meantime, I know JD posted a few links to the mental game of trading if you want to check that out. As I said, check out the Topstep website to look into our group coaching. We got some one-on-one coaching options, all sorts of good stuff there. So come stop on by. Now, I'm going to go jump in the pool, I think. I'm technically on vacation right now.
Nice.
Look at
Jack.
you.
Yeah, but you know what? I had to come back for this. It is that important. But yeah, always a pleasure, Jared. Thanks so much again. Hope to see you all around. Oh, you want to sign us off?
Sure thing, Jared. Thank you so much. And again, I've been at this 40 years. I learned so much from you, and I appreciate that. Thank you very much.
Highest compliments, John. Thank you.
Bye, everyone. We'll
Take
see you
care, everybody.
soon.